briefly, a little sideshow here on crypto and NFTs and anything else in that whole blockchain space. What are your thoughts?
Well, there's a tremendous amount of venture capital, private equity capital, hedge fund capital going into these markets for a reason. And I think to make it more pragmatic to think about for those that really don't, allocate to cryptocurrencies or blockchain technologies, when you invest in Microsoft or you invest in Alphabet or Google, you invest in those companies, you're investing in software. These companies are all creating productivity with software products. You invest in their equity, and you're doing that because they have software engineers that make products and services that are sold to people. Now, the best way to look at this, Bitcoin is not a coin. It has nothing to do with being a coin. It's actually software. Ethereum is software. Polygon is software. HBAR is software. Solana is software. These software products are designed to enhance and reduce friction in financial services, particularly payment systems. And so while they're not regulated yet, stable coins, Circle, for example, it's all software. And so I've simply said to myself, okay, if I'm willing to own, a 3% weighting in Google or Microsoft, why wouldn't I own a 3% weighting in a basket of software products and cryptocurrencies, which I've done? And so it's more volatile, obviously, and everybody's waiting for the regulator. But if you're going to be a crypto investor, investing in the US is probably not the best place. There's jurisdictions right now, such as Canada, where they've already approved Bitcoin ETF, Ethereum ETF. There's all kinds of companies that are doing crypto exchanges that have been provided for by the regulator. Switzerland, the same. Germany, the same. Norway, the same. United Arab Emirates, the same. Those are places where I have made investments where I'm not against what the regulator's policy is. And eventually, I think the U.S. will start to regulate, and they'll go there too. But I definitely want, I have some exposure. I actually reduced my fixed income down from 30% to about 21%. The rest is in crypto, which is basically software.
So here's a counterpoint that has to be said. I mean, you mentioned a bunch of companies, Amazon, Google, et cetera. They generate revenue, and they have customers, and their revenue has been growing. And of course, there's no real revenue generated by these digital coins or whatever you would want to call them. So there are some counterpoints to all of what you said. It'll be interesting to see how the whole thing plays out. It's also hard to create a brand new Microsoft or a brand new Amazon because they got such market position. Yet it seems that a dozen new coins are created every week or every month. So I'm a bit of a skeptic on all this stuff. You're on board, and it'll be fun to see how it all plays out. There is one category that's interesting. NFTs, I own none of them, but it's a basic way of creating digital ownership of actually an asset that exists. And there's also a company you're involved with called startengine.com that has been doing an alternative to NFTs. They're allowing people on that platform to buy part ownership of an individual work of art, an individual asset of some sort that actually has a tangible presence in the world, as well as the ownership. That's an interesting blend. So talk briefly about NFTs and compare it to what StartEngine is doing in a similar way.
Yes, NFTs look interesting. It's a digital record of a physical asset is the way I like to look at it. I'm not really a buyer of, lazy apes and JPEG pictures, and that makes no sense to me. But, in the case of StartEngine, they're in the auction process right now of a Liechtenstein, which is being turned into fractional ownership through NFTs. And that model is actually emerging as something of interest to investors, not just with StartEngine, but others. So you can actually own a diversified art portfolio without actually owning the art. You have the right to it through an NFT. The watch industry is scrutinizing, looking at NFTs to authenticate the multi-billion-dollar secondary watch market by taking high-resolution images of the dials, micro-scanning the dials, so basically a fingerprint is created that's put into an NFT, and it follows the watch around through owners. But you don't have to keep authenticating it when you can just scan the dial and see that it was the dial that was originally created with the watch, that kind of thing. So a lot of this digital technology, it all resides on the blockchain. Again, software, it's all software. And that's why I made those investments. I admit the volatility is unbelievable. It's 50%, a month. But the trend seems to be, again, up to the right with lots of volatility. And we'll see what happens. I'm not betting the farm on it, but I'm taking a more interested view in what all things crypto, all things blockchain, all things NFT.
Well, I think the technology is going to play out and actually provide some efficiencies for the economy at some point, not yet, but at some point. And quite likely to be some winners as well as quite a lot of losers in the whole mix of dozens or hundreds of coins and all that stuff. But it is interesting to see it play out. And I think there will ultimately be some benefits for the economy, for people in terms of efficiency gains.